What's up, guys? It's Dan from Coin Bureau Trading, back at it again with another crypto market update. Today we've got XRP, Stellar, and Hedera. I'm sure you're all wondering what these cryptos are up to. Are they going to crash? Are they going to rally higher? What's going on? If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of these cryptos. Your analysis could be different, and honestly, guys, if it is, that's awesome, because the more difference of opinion we have, the better traders, the better investors we're all going to become. With that being said, let's jump straight into it here, guys. What's really interesting, of course, is that yesterday we got news that the CME listed a future, or I guess basically there was a leak from the CME website that they were planning on listing futures for XRP and Solana in February, specifically on February 10th. They've since deleted that site and said, no, it was a mistake and blah, 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 which is just an excuse, guys. Let's be real. I should give a little bit of context here. So for those who don't know, CME is basically this institutional exchange, let's say in the United States, that's focused on futures trading. So basically just like betting if the price of a crypto is going to go up and down, or the price of any asset for that matter. The interesting thing, or the reason why this is significant rather, is because like historically for the spot Bitcoin ETF to list and for the spot Ethereum ETF to list, the CME was basically instrumental in that. Basically, the CME needed to list futures contracts first, basically so that the SEC felt comfortable approving the spot Bitcoin and spot Ethereum ETFs. So as you might have guessed, that means that when the CME says, hey, or I guess rather revealed that they're thinking of listing futures for XRP and Solana, that basically tells you that they're setting the stage for a spot XRP and a spot Solana ETF to be approved in the coming months, or at least that's probably the idea behind the move. And with that being said, guys, what's even more interesting, I'll give you guys some alpha that I almost guarantee you're not going to find anywhere else. I've been in crypto now, I think for almost 6 years. So I can show you guys some headlines that I remember. Way back in April 2022, CME added reference rates for Solana, Cardano, Polygon, and a bunch of other altcoins, of course, including XRP, I believe, and Stellar, which of course we're going to be covering in a second. But the point being, guys, is that CME has been wanting to list futures, I think, for these cryptos for a very long time. Of course, they couldn't do it back then because we entered a crypto bear market and all the interest kind of went away. So for them, like adding these reference rates would have been kind of not a smart move at the time, let's say. But reference rates, you could say, are kind of like the precursor. It's kind of like they're gathering the data in preparation to list the futures, if that makes any sense. I know it's like a very watered down explanation, but basically all the way back in 2022, basically for almost 3 years now, they've basically been gathering the data required to list these futures for these altcoins. And of course, I guess there was a leak that they were planning it for XRP and Solana, but the fact that they're planning it for literally like a dozen other altcoins tells me that these first two cryptos here, XRP and Solana, if those futures do launch in February, on February 10th, it's going to be the first of many to come for these altcoins. So just keep an eye out on that. Anyways, guys, moving on now to the XRP chart. This is where things get very interesting. Of course, last time we covered XRP, I highlighted this $3.5 target as being something that could be hit. And as you can see, XRP got very close. It got to $3.4, so just underneath that $3.5 target. And then, of course, that begs the question: is this move over, or is XRP going to continue heading higher? To be honest, guys, I actually think there's a good chance it's going to continue heading higher. It really depends on what happens with the executive orders, and it's also a question of when, right? Like, could we see a scenario here where the executive orders, that come out are not that bullish, and then XRP falls all the way back down to this resistance level, maybe even all the way back down to the support level of $2? That's certainly possible. But as I've been saying, guys, now for weeks, the risks are to the upside, and this is something I was even saying when Bitcoin was crashing down to like 89K, and everyone was saying it's over and blah blah blah. And I was like, no. And of course, some people in the comments were like, oh, you don't know what you're talking about. All the other guys, they're experts and all this stuff. But I guess not many people know that I've been in crypto for a long time. And, not to say that I'm an expert, but myself, I'm still learning every single day. But I can tell when people are getting a little bit too bearish. And it definitely felt like people were too bearish. And wouldn't you know, we saw a huge rally in some altcoins, especially with XRP here. Anyways, guys, to be honest, this is like a stage where it's very tricky. If you've been trading this and you went long above the resistance line and you're in massive profit, might be, it really depends on your situation, I guess. Banking some of those profits wouldn't be the worst idea, but at the same time, I do think that there is a good chance that XRP is going to be heading higher. But again, guys, it really depends on these executive orders. I do think that in a worst case scenario, we'll see XRP like basically grind back down to this resistance level, kind of the same way you can see here after the last kind of blow, like the big rally. I don't want to say blow off or blow up, but after this last rally here in early December, you saw that there was a little bit of like a chop and grind before XRP kept moving higher. We could see something similar here with like a chop and grind down to like the February 10th when we do see the CME kind of confirm, yeah, actually we were telling the truth. We are going to have these CME, and that would take XRP even higher. And that might be frustrating for some of you guys to hear. But to be honest, guys, the longer it takes for these cryptos to grind higher, the higher that they can go. If a crypto is just going up only, you create a scenario or you create a risk that the price is just going to collapse. So when I'm saying, oh, it might be a couple weeks here before XRP really starts heading meaningfully higher, don't be discouraged by that. You should be encouraged because it means that going to $4, $5, even higher, it basically opens the door even wider to those possibilities. The more gradual that the rise is, the bigger the gains will be. Just like burn that into your mind. You actually don't want XRP to go up like 2 or 3x overnight. It's better that it goes up 5x or 10x, over the course of the coming months. I'm not saying that it will, but this is how you have to think about crypto. But anyways, guys, point being, target potentially has been hit here in the short term. We're going to have to play it by ear in the next couple days. Still waiting for executive orders to come out. I'm going to get more into that at the end of the video. I'm sure that you guys have probably heard some FUD now circulating on Twitter/X about the Bank of Japan is going to raise rates and we're going to see a crash like we saw in the summer. If that's something you've heard, then I've got a treat for you at the end of the video. I'm going to dispel that FUD and you'll have some peace of mind, let's say. Anyways, guys, as you could probably tell, we were using Binance there. The Coin Bureau deals page does have up to 20% in trading fee discounts. Or rather a 20% trading fee discount and up to $600 in bonuses. And of course, Binance is one of the top crypto exchanges. As I've been saying, guys, even if you just have a few $100s or a few $1,000s, if you're trading frequently, these trading fee discounts will help you out a lot. I know this from experience, from the previous cycle. And again, like these deals don't cost you a thing. The exchange gets a new user, you get a trading fee discount, and we get a cut of your fees. That's how the Coin Bureau makes its money. We have no agenda here. We're not paid by Solana. We're not paid by Ethereum. We're not paid by Algorand or anyone. We don't care what crypto you like, so long as you're interested in buying it or selling it or trading it. We're here to help you out with that by giving you these trading fee discounts that honestly I don't think you can find anywhere else. We're the biggest crypto YouTube conglomerate, let's say, and this has allowed us to secure deals that you just won't find anywhere else. And again, they don't cost you anything, so do take advantage of those using the link in the description. Anyways, guys, moving on now to Stellar. And of course, Stellar is very focused on payments and things like that. There isn't really any obvious catalyst here that really stuck out to me when I was scrolling through their Twitter/X feed. Of course, here Stellar recently was promoting that they're going to be very focused on cross-border payments and stuff like this. I know they're working closely with MoneyGram and these types of people. And the reason why this is significant, guys, is you might have heard that the Bank of America CEO basically said that the whole financial industry is ready to jump into crypto once there's clarity around regulations. Specifically, I think once this banking rule is officially repealed, which is something that could potentially happen as a result of an executive order. I'll come back to that in a little bit, but basically this was like a lot of people were thinking it would happen yesterday, but it could happen today or tomorrow, but it seems it's going to come very soon here. And once it does, I do think it's going to be very bullish for Stellar and other cryptos that are really targeting these kind of like cross-border like extension of the banking system, banker coin, type stuff, ISO 20022 cryptos, let's say. I think it's going to be very beneficial for them, obviously, when you get all these headlines of these big banks coming out and saying, yeah, we're comfortable using chains like Stellar now, we're comfortable using chains like XRP and Hedera and everything, for whatever use cases they have, or most likely probably Ripple's stablecoin, to be honest. But anyways, guys, it's really interesting. And of course, XLM's chart looks pretty similar to XRP, but of course the difference here, guys, is that XLM, like I think I even mentioned this in the previous update, XLM is kind of just lagging XRP, but you can see the pattern is almost identical. And if we're kind of just step back and just think, okay, what would XLM look like if it copied the same pattern? And I guess to help you guys out, like just let's go back here to XRP. So you can see that there was this kind of bull flag forming, and then it broke above this resistance line. We got a nice rally almost up to this target. And if we imagine the same thing, guys, here for XLM, you can see, yeah, like that would be a pretty sizable gain. And I guess to break down the specific target math, for those of you who don't know, the way that I draw these lines is I just look at the most recent price action and I say, okay, where did this most recent move start, right? What is the starting point of this most recent recent move, which is why I have starting point written. And of course, we're on the daily chart here, guys, always on the daily. And so the starting point here is quite clearly somewhere around 24 cents. I would say the resistance is somewhere around 54 cents. Maybe it's somewhere around 50 cents, potentially closer. I don't split hairs over a couple cents here and there, to be honest, guys. That you don't need to be that obsessive unless you're really like a expert hardcore trader. In case you couldn't tell, I'm really here to like teach you guys, especially if you're someone who's learning. But anyways, the difference between those two levels, of course, is 30 cents. And all we have to do to get the target is we add 30 cents to the resistance, and we get a target of 84 cents, which of course from the current price, you'd be looking at an upside of what, around basically double, which is not too shabby at all, of course. And if you're trading it, of course, you need to wait until prices are above this resistance level, and from there you'd be looking at around a 57% gain to the upside, which of course you can juice up with a little bit of leverage, sprinkle in a little 2x or 3x in there, and you'll get the same gains you would if you were holding it from these levels. Anyways, guys, I do think that XLM is going to hit this 54 cent resistance here as soon as some executive orders are announced from Trump. Again, we've been waiting for these since the start of the week, but I do think they're going to be coming here in the next 24 to 48 hours. This is not me saying this, just pulling my ideas out of a hat. This is according to Jeremy Allaire, the head of us, or the CEO of Circle, which issues USDC. I'll come back to that in a second, as I was saying, guys. But yeah, XLM is looking really good, and if you're thinking of like a catch-up trade, to XRP, I do think XLM is the one, and I actually think HBAR is looking quite similar, which of course brings me to Hedera. And in this case, nothing's really changed here. The thing that's really interesting to me, of course, is that Hedera has this conference that's coming up. It's something I think I highlighted last week as well. Hedera is going to have its first user conference since 2018, and it's going to take place in February. And by this point, guys, let's start putting the puzzle pieces together here. So we have the CME coming out, early February. We have Hedera's conference in February. There seem to be a bunch of other conferences and events scheduled in February. FTX repayments are going to start in February. You start putting all these catalysts together, and you start thinking, wow, maybe we'll just see pretty sluggish price action until the end of January. Always possible, if there's no executive orders. But it really looks like the end of January and basically all of February is just going to be an absolute, it's going to be like a rocket to the moon, like for all these cryptos, because they all have everything planned around that time, which tells you that, potentially there's some big insiders and big players who think that that's really when everything's going to start pumping. Some of you might have seen that there's been a lot of USDC stablecoin moving onto Coinbase in the last couple of days, which is kind of speculation that basically these insiders are preparing, or maybe they're already accumulating altcoins and Bitcoin and all these other cryptos in preparation for these executive orders, so that when everything starts pumping, they can start dumping on us retail, classic stuff. But anyways, guys, yeah, this is something to look out for, and I think even yesterday we were discussing, I think it was Algorand that has these staking rewards, or maybe it was a couple days ago. Sorry, guys, time really flies here in crypto. It's been the same day every day for the last 5 years. But in all seriousness, yeah, like with Algorand coming out with staking rewards at the end of the month, just like literally over the next 6 weeks, it just seems that all these crypto projects have a lot of big catalysts coming. So don't be surprised at all, again, if the prices do surprise to the upside, which of course brings me here to HBAR. And of course, HBAR, this is one of these scenarios which is really frustrating, especially if you're someone who's trading, that you'll see the price go above the resistance level for a day or two, and then it just goes right back underneath, which is exactly why, like when you're trading, you always want to have that stop loss down somewhere near support, so that in a worst case scenario, you're getting out of that position if it does really like roll over and you get some nasty surprise. But yeah, guys, it's really frustrating, but all things considered, HBAR is still looking very bullish in my opinion. And of course, the target math here is very simple. We have a starting point of 15 cents, resistance of 35 cents. The difference there is 20 cents. And of course, we add the difference to the resistance, and we get a target of 55 cents, which of course, from the current price, you'd be looking at around a 75% gain, which is not too shabby at all. And from the resistance line, you'd be looking at a gain of around 55%, which again, you can juice up with a little bit of leverage, 2x, 3x, or 1x, or whatever x's you like. But again, I'm really actually stoked in the next couple days here. Finally, I think probably early next week, I'll finally be showing some open trades, and like showcasing the cryptos that I'm betting on personally here. But for the time being, yeah, like HBAR is one that I'm watching very closely. Let's say that's why I'm bringing it up. But yeah, guys, Yeah, like I honestly think, like there's nothing bearish rather in these charts. And like of course you can say, "Oh, I can see a double top forming or whatever." Just forget it, guys. Just zoom out. You can see like look how bullish this is. You have a huge leg up, consolidation, consolidation. And what do you think comes next after that? I mean, literally look at this move back here, guys. It's like a smaller version of this, right? You can see that here you had a huge leg up and then whatever. And then I'm sure that here people were saying, "Oh, it's a head and shoulders, it's a double top, it's over." Maybe even at this red candle they were saying, "Oh, that's it." They were drawing some resistance trend line here and saying that's done, it's over. And then of course it just exploded higher. So this is going to be the case, I think, guys, for most cryptos over the coming months here. So just do keep that in mind. The risks are to the upside. With that being said, of course, it's about time that I shilled the Coin Bureau Club a little bit. That's where we do deep dives into promising small cap altcoins every single week. If you want to look, or rather, if you want to see what the Coin Bureau Club looks like, you can check out yesterday's video. At the end, I actually did a little bit of a deep dive. I think I'll maybe start doing that, like one video a week. I'll just like show you guys a little bit behind the curtain here at the Coin Bureau Club to see what we have on offer. And it's a pretty solid platform, I would say. We have, of course, weekly altcoin reviews, which is how we decide which cryptos we review each week. And the way that we pick these altcoins that we add to the polls is based on our own research as well as the research of our members. We have a research feed where I'm sharing insights every single day, as well as the other researchers here at the Coin Bureau. I'm not the only one. We're a growing team, pretty sizable team, talented team, I would say, at least for the other guys. And of course, we have a team portfolio where we showcase the cryptos that we hold, as well as the cryptos that we're considering accumulating. We have an exclusive deals page where you can find discounts on crypto, like analytics platforms and stuff. And of course, we do have a members Discord where you can ask us questions and where I'm doing technical analysis on Bitcoin, Ethereum, and select altcoins every single day. With all that said, guys, it's about time we turned to some alpha here. So as I was kind of hinting throughout the video, Jeremy Allaire, who's the CEO of Circle, of course, one of the largest stablecoin issuers, he basically said expect a repeal of SAB 121 basically imminently. And for those who don't know, SAB 121 is basically this rule in the United States that it basically prevents banks from working with crypto, from custodying crypto, all this type of stuff. This rule was actually repealed by the U.S. government, but Joe Biden vetoed the bill. He vetoed the repeal, which is obviously pretty annoying, right? And to my understanding, Trump is just basically going to come in and he's just going to sign an executive order repealing this. Again, a lot of people were hoping it would happen yesterday. Maybe it's going to happen today, maybe tomorrow. Who knows? But the fact that Jeremy's talking about it on the news, this is like top of mind. This is the number one thing. And as I was mentioning earlier, guys, like with Stellar and these kind of like banker coins, I mean, the ones that we're covering today, XRP, Stellar, and Hedera, as soon as that banking rule is repealed, then what do you think is going to happen to all these banker coins, all these ISO 20022 cryptos, right? They're all going to go up, probably. I mean, there's no guarantee. But, if I had to, put it on a scale of 1 to 10 probability, it's probably like an 8 or 9 out of 10, right, guys? But anyways, so this is one thing to keep in mind, like I know the market's been really weak lately, but these XRP, Stellar, Hedera, and a few other cryptos have been holding up quite well. And I do think that these are the ones that are going to pump the hardest as a result of these executive orders. And of course, that brings me, I guess, to the FUD of the day. It's really funny, guys, when the crypto market is looking sluggish or like prices are going down, people start asking questions why. You know what I mean? Like they're like, why is it crashing? Why is this happening? Why? And of course, so people are saying, oh, it must be that the Bank of Japan, tomorrow on Friday is going to be raising interest rates and we're going to see a market crash like we saw over the summer because of something called the yen carry trade unwind. This is a really, I guess, a big rabbit hole. But the long story short is what basically happens is because interest rates in Japan are super low, what big investors around the world have been doing is they will exchange their currencies, like let's say, I don't know, like US dollar or euro or whatever. They swap that basically or trade it for yen, and then they borrow in yen, or I'm butchering it, guys, but basically it's just like because the interest rates in Japan are super low, all these basically whales from around the world, all these hedge funds, they basically borrow a bunch of yen, and I'm explaining it correctly now. They borrow a bunch of yen, and then they basically swap that into some other currency, and then they invest in other assets like U.S. stocks and whatever, right? And what basically happened is like when the value of the yen goes up or when interest rates go up, if either of those two things happen, then basically all these debts that were taken in yen, they have to start being paid back. and that results in the sale of assets that were bought, which is basically everything. So like all the stocks, crypto, all this stuff. And that's what happened over the summer, and that's when like Bitcoin fell below 50K, which I actually called, by the way. But yeah, and if you want like a deeper dive, a proper explanation, I know I butchered that, and I'm sure some people in the comments are gonna be like, "Oh, you clearly don't know what you're talking about." To be honest, guys, I'll be straight up with you. I'm not a macro expert, but I listen to macro experts every single day. That's an area where I'm still kind of learning. I mean, I've been learning for the last couple of years. But if you want a really like very deep dive expert take, then definitely check out this recent interview here from Blockworks Macro, which is an amazing channel that kind of combines crypto and macro. Watch this interview with Brent Donnelly. It's literally from yesterday, and he basically explains that the yen carry trade was mostly unwound. Like it's not a risk going into this Bank of Japan meeting, especially after Donald Trump's election. A lot of people who were doing these borrowing in different currencies, they stopped doing it because they were scared of volatility in currencies as a result of the Trump presidency. So basically, there's no risk of this yen carry trade, at least according to this guy, who's an actual expert in foreign currencies and this yen carry trade stuff. And he makes a very compelling argument, and he even has like data to back it up. And he actually said the biggest risk is not that the yen will go up, but that the US dollar will go down. Like everyone is long the US dollar because they thought Trump is going to come in and put in all these tariffs and everything, and the US dollar is going to go up. But as you guys might have seen, the US dollar is actually falling, and the falling of the US dollar is actually bullish for risk assets like crypto. So in a paradoxical way, if the US dollar falls as a result of what the Bank of Japan does on Friday, or tomorrow rather, it could actually cause crypto to pump rather than dump, which is the exact opposite of what everyone is talking about now on Twitter or X or whatever. They're all saying yen carry trade is coming, Bank of Japan's going to hike, we're all screwed, everything's going down, we're going to be chopping sideways for another few months. Mm-mm. That's not going to happen, guys. I think the risks are to the upside, and I think that at least if what Brent here says is accurate, which I'll take his word for it, he's been doing this for 25 years, I think, or longer. I'll take his word for it that it's going to be bearish for the US dollar, which of course is going to be bullish for risk assets and crypto, which is literally what he says in the interview. Again, I'm not just pulling this out of my hat or out of my head. It's literally, he literally says, yeah, the dollar is going to go down. It's going to be bullish for crypto and risk assets. So don't be caught off sides here, guys. Don't let all this FUD and everything on FUD or FOMO. Ignore everything that's going on social media. Just if you find a crypto that you think is awesome, just buy it and hold it. Seriously, it's not that hard. As Raoul Powell likes to say, don't F it up. Literally just allocate to the cryptos you love the most and just hold it, because over the next few months, everything's going to be going up. If history is any indication, if the 4-year cycle is intact, if everything, historically is intact, we're going to see very big gains in the coming months, and you do not want to miss that train. You don't want to sell early because some idiot who actually doesn't understand macro was saying that yen carry trade is going to cause your bags to go down, okay? Don't worry about those idiots. Just listen to the experts, trust the experts. I'm not trying to trigger anyone there, but yeah, guys, like just if you start seeing stuff about macro, just literally go onto like Blockworks or some other podcast that's actually with macro people and listen to the arguments and explanations they make, and you come to your own decision on whether you think that the yen carry trade is a risk. Based on what I've heard, it is not, and the fact that everyone expects that it is tells me that we're in for a very nice upside surprise in the coming days, especially when you combine that with the executive orders. With all that being said, guys, if you did make it this far, be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.